traders, this is Cousin Benny coming to you from theclosingprint.com on December the 4th, 2016. In this edition of your weekend video newsletter, we'll talk about the indices and the general market malaise at highs. The only index that closed higher was the Dow Industrials. Of course, that's only 30 stocks. Sentiment is starting to turn more bearish, having peaked last week at highs. We traded that. Also, NYSE and NASI are moving lower. The summation index on both NASDAQ and the New York Stock Exchange are turning lower. We have breadth trending lower, NYHL, and we have the high-low percent turning at highs as well. NYAD also reflects a change in breadth. CPC, there's no signal. VIX is trending higher at 14.12. That's not extreme yet. Currencies, US dollar was off by 0.67% for the week. More talk of euro fallout with the elections today in Europe. We'll have to keep an eye on that. If for some reason France or Italy do exit, that could put a nail in the coffin for the euro, and that would undoubtedly have an effect on the markets. So there is that risk. Bonds, we have yields. All durations were higher last week versus bond prices, which were lower. TLT has been off 15.49% from the high of the year. UST SPX, the bond stock ratio, is in a trough. It's at lows. It could turn higher. That would be bullish. If it turns back down, that would be bearish. Commodities, we have crude with a huge move last week at 12.02%. Copper's flagging, continuing to trend higher. And gold is near its lows, off by 0.60% for the week. Sectors, XLP XLY is at a bottom. However, it is looking like it's going to turn back up. If that continues, that would be bearish generally for the indices. We have XLE continues to show bullish strength. That's trending higher. XLU, XLP, XLV, there's some rotation there, and then we're looking at IYT still at highs. We saw XLF, the financials, with an inside day on the weekly chart. So we'll watch that, as we would anticipate that most of the post-election jubilance has been priced into the market, and we'll probably see some profit taking in those sectors continue this week. Fed affecting the yields, obviously we have a rate hike certainty of 100%. Bottom line, post-election fundamental shift to optimism continues, but we're seeing some rotation as we see profits being taken at highs after 3 weeks of moving higher. And there's that Italy risk. IBD50, we'll look at some setups there, and of course Bukowski has 4 of 5 red with his CPI signal all green since 11/03/16. Looking at the spiders for a moment, we've annotated percent markdowns on the chart, looking for a possible pullback to this volume by price support zone as RSI continues to trek lower. It tipped up a little bit higher on Friday on this doji candle. We're between the zone of the 9 and the 20, and we're currently on a sell signal on the daily charts. Stochastic and MACD are both turning lower. This could continue, and that would be bearish if we see more distribution volume like we saw last week on Wednesday. So generally speaking, the spiders are in an area of trepidation. We have to keep an eye on it, looking for a target of around 217.90 at this volume by price support zone. As we've been reporting, once price action drops below the 9 and the 20 EMA, you have to consider a bearish trend until price gets back above the 9 and 20 EMA. On Friday, we tested that area. Note the sellers present in this candle. The fact that we did have the last hourly candle green, that just simply means that we saw profit taking at the end of the session. MACD continues lower through 0, Tick cumulative continues to move lower, as well as stochastic. So stochastic's near the green zone on the 60-minute chart. Look for this trend to continue. If it crosses back up early in the morning, Monday, we could see a brief rally to the upside, testing the 9 and the 20 again on the 60-minute time frame. Note we're on a buy signal currently, so we'll be testing those highs Monday morning. The Nasdaq Composite 60-minute fared worse than the S&P, as you'll note in the slope of these moving averages. SOTMA is severely lower, so we would anticipate rejection at the 9 and the 20 to be more severe due to the intensity of the sell-off. Now note, RSI is an oversold zone. This could embed. This is a 60-minute time frame. So watch for stochastics to turn back up, as well as MACD continue the trend if you're bullish. We'll look for these stocks that rallied to highs to give us an indication whether or not we should look for this to move lower. Off of the post-election pivot low to the pivot high, we came down to the 382 level, which we outlined midweek. Once we started to break lower, we're looking at this as a bear flag. So right now, price has to prove direction. If this gets back above the 9 and the 20, then that would be bullish. And if we have rejection at the 9 and the 20, that would be bearish. If you're new to the markets and you'd like to join us in our trading room, check out theclosingprint.com, click on Vinny's blog, go to the sign up button, and check out what a membership might mean to you. Take care, I hope this helps, and we'll see you in the trading room.